Good morning, everybody. It is Tuesday, May 20th, and we're going to start our prep today for our four indices that we do daily. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So we'll start off where we did yesterday and where we typically do is with our COT report. Again, we only get this data once a week, but we use this to understand how the commercial side of the market is positioned. And commercials are net long, and they're longest they've been in the last 12 months on the S&P 500, on the ES futures, and they've been looking to push the market higher and distribute. We saw that the last couple of weeks, and then they rebought right ahead of the China tariff pause, and now they have a position they can distribute. So we're still looking for higher for that sell to come in, but they can sell this market down as they did back in May of 2023. They were max long. They sold all the way up into July and then all the way back down until the October lows and profited a good amount of money on that move. So we're going to continue watching for that here. Some other ones to pay attention to. Bitcoin, we'll go into that as well today. That is max long, and we are nearing those all-time highs for that liquidity move. On to credit spreads. Nothing has changed here, so we'll see if that does change in the next 6 to 8 weeks with new data coming out. But right now, all this tells us is there is no recession coming. So forget what the headlines say and the narrative they drive. The pricing in the bond market on high yield is not signaling that a recession is in the cards. And on bond volatility, it's rising again. We mentioned that yesterday with the 7% move in the TLT VIX. And we showed that in the middle of the week last week that the move index was likely bottoming. So yields were going to bounce and bonds would either stay sideways or drop. And that's what we're seeing. So we're going to look for a move back on the move index to, 108 to 110. And then we'll see where the market's going from there. That will probably bring us into month end as we look for that kind of move. On to multi-asset volatility. We had a bounce yesterday in volatility with the markets up. So we have that 20% of the time where the VIX and the S&P are moving synonymously, which typically we are moving inverse. That could be signaling a top, a capitulation move as traders start to reposition as there is more volatility, more premium coming in. And we'll look at another chart on that as well. If volatility continues to come down, so if we get back under 18 on the VIX and really under 17 towards that 1629, then we'll know this was just a small blip and we can see the market push higher. Otherwise, this is our first sign that we could be nearing a top as this is changing the underlying flows and the underlying business as risk is beginning to come in and getting priced in at a higher rate. And remember that Friday was OPEX and tomorrow is the VIX expiration. So we want to be paying attention to those days. And then on the short term, and this is what we talked about yesterday, one thing this administration is good at is scheduling press conferences and creating uncertainty. So yesterday, we came into the day, nobody had protection as we came into the open and there were events added to the calendar. We saw this spike right at the open. Then the insurance providers in the market moved the market up to devalue all those policies. And the market stayed elevated until the Trump-Putin call was done. And once that Trump-Putin call was done, we then saw the market stay sideways and start to make its move down. But once all those insurance policies had to be closed and were worthless. And today we have three events from the White House, Trump at 9 o'clock. So that'll be in the next 5 minutes at 11:55. And then at 1 o'clock, we have the press secretary coming on. So we will be looking for our same insurance play, watching this closely. And again, if you can pay attention to where these are, you can follow the money in the market and follow the positioning and things that can't be spoofed by narratives or on the DOM is actually what traders are positioning themselves for. So what you're seeing on your actual time and sales or on your TPO chart for what has happened, we're seeing where these are coming in and then understanding where that plays out in terms of directionality. Now, lastly, before we get to our levels today, we talked about that VIX up, SPX up for the risk coming into the market, and we're seeing that on our pricing model. So typically when this blue line is over zero, that is more risk in the market. We have chance for more downside moves and bigger downside moves as that grows. And then once it starts to shrink or gets below the zero line, then we start to see more supportive moves in the market. So as this is on its rising scale now, we went from under zero to over zero. That brings in a lot of risk into the market today. And not just for today, but for the coming days. So this is what we'll be watching as well in terms of pricing under the surface. So now for what you guys typically want is just the levels for today. We are looking for rotational price action between 59.40 quarter to 6,002 3/4 on the ES, with our pivot at 59.70 and our minor line in the sand is at 59.66. If we get over 6,002, we're looking for 6,034 and 6,052. 52 half, sorry. And if we get under our rotational low at 40, we're looking for 59.09 and 58.90, which puts us right at our line in the sand. So you can see that on the chart here, this horizontal pink line is right at our low range. So if we do get that sell off from the increase in risk premium being put into the market, we are likely just going to come down to our line in the sand, and that will move a little bit throughout the day. But it's not likely we're going to get underneath that and categorically change the market today, at least. Other key levels to pay attention to today: 59.65 3/4, 59.52 quarter, 59.37, 59.24 3/4, 58.96, and then on the upper end, 6,010 half. For NASDAQ, so very similar to ES, we are well over our line in the sand here, so this will not be changing. When the market does turn, or if it turns in a drastic fashion, we'll be looking for both the ES and the NASDAQ to get below their lines in the sand. Otherwise, today, we're looking for rotational price action from 21,353 to 21,622 with our pivot at 21,488. If we get over 622, our targets are 756 and 837 half. And on the downside, we're looking for 21,217 3/4 to 21,137. Three other key levels for you to pay attention to today: 21,574, 21,408 half, and 21,369. So we have two of those in. All of those are inside of our rotational zone for you to be paying attention to. And now on to oil. So on oil, again, we're just above our line in the sand here on oil, and more sideways overall. 55 to 64 is the range that we're in. We are looking for rotational between 62.68 and 61.15 with our pivot at 61.96. If we get over our top end of the range, we're looking for 63.33 and 63.83. And on the downside, 60.33 and then 60.01. And lastly, to gold. So again, with those bond yields rising and people wanting to mitigate risk, we see people go towards gold or now into cryptocurrencies, into Bitcoin. And again, as we saw on our COT chart here, commercials are max long on Bitcoin and on gold. So they have reasons to push both of those as that bond volatility comes back into the markets. So today for gold, we are looking at rotational between 3250.1 and 3193.9 with our pivot at 3227. If we get over our rotational high, we're looking for a top end at 3313 and a level in between there at 3293.2. And on the downside, 3160.7 and 3140.8. And other key levels to pay attention to are going to be 3307.4, 3274.6, 3220.3, and 3198.7. Those are going to be all the areas that we want to pay attention to on gold today, where we know commercials are going to be sitting, and we want to see if they're going to be buying or if they're going to flip that buy into a sell and turn the market at all. So that's what we have for today, guys. Remember, first and foremost, control your risk. That's the only thing we can actually control in this game. And if we can survive long enough and build out our edge, then we can actually make a good amount of money at this. And that's the end goal, is to become consistently profitable traders where this is a business and your trading is your job as opposed to you just randomly clicking the button and gambling. So make sure you're building out your edge and controlling your risk, and we'll be back again on Friday. Have a great week, everybody.